The stock market in 2026 is setting up to be one of the most explosive opportunities we've seen in decades. But here's the hard truth. Most investors are going to completely miss it because they don't understand what's happening beneath the surface. While everyone else is chasing headlines, a handful of stocks are positioned to absolutely dominate this year, backed by forces so powerful that missing them could mean leaving life-changing gains on the table. Today, we're breaking down 4 must-own stocks for January 2026, each tied directly to massive economic shifts that are already in motion. These aren't gambles. These are calculated plays based on hard data, government backing, and unstoppable market trends. Before we dive in, if you're serious about protecting and growing your wealth this year, make sure you're subscribed to Stock Vibe. We're cutting through the noise and bringing you actionable insights you won't find anywhere else. Hit that subscribe button and turn on notifications so you never miss an update that could impact your portfolio. 5 major economic themes driving 2026. Now, let me be crystal clear about something. If you don't grasp the bigger economic picture unfolding right now, you're going to be blindsided. There are 5 major themes driving the market in 2026, and every single stock we're discussing today is directly connected to at least one of them. Understanding these themes is the difference between profiting massively and getting left behind. Theme number 1, the currency crisis. First, we have what I call the currency crisis. The United States is drowning in $38 trillion of debt. Let me put that in perspective. Back in 2000, it was just over $5 trillion. By 2008, it hit $10 trillion. In 2020, $27 trillion. Now we're at $38 trillion and climbing. There are only 3 ways out of this mess: brutal spending cuts, outright default, or inflating the debt away. The first 2 aren't happening, which leaves only one option. The smart money knows this, which is why gold just posted its best yearly performance since 1979. Silver is catching up fast. Real assets are getting bid up aggressively because people are racing out of the dollar. This trend is not reversing anytime soon. Theme number 2, the energy revolution. Second, we have an energy revolution that most people aren't paying attention to. With recent developments in Venezuela, the United States now has access to the largest oil reserves on planet Earth. We're talking 303 billion barrels. Venezuela's production collapsed under mismanagement from over 3 million barrels per day down to under 900,000. If American companies can rebuild that infrastructure back to even 2 or 3 million barrels per day, it fundamentally breaks OPEC's pricing power. This isn't just about cheaper gas at the pump. This is a strategic chess move that allows the government to keep printing money while suppressing inflation numbers. Energy prices drop, which keeps the consumer price index looking tame, which gives cover for more money printing to inflate away that debt mountain. It's a geopolitical masterstroke, whether you agree with how it happened or not. Theme number 3, geopolitical tensions. Third, we're sitting on a geopolitical powder keg. Venezuela is just one flashpoint. Iran tensions remain at a boiling point. Greenland is suddenly a strategic priority because of rare earth minerals and Arctic shipping routes. Taiwan is being armed to the teeth as a counter to China. Whether these situations escalate into hot conflicts or remain cold standoffs, the result is the same: massive defense spending. Wars are inflationary. Preparations for wars are inflationary. Cold wars are inflationary. Defense contractors are about to see money pour in like never before. Theme number 4. The AI power crisis. Fourth, we have the artificial intelligence power crisis. For the last couple of years, everyone was excited about AI productivity gains and revenue potential, but now we've hit a hard ceiling: power consumption. AI data centers are absolute energy monsters, and whoever controls the most reliable power supply will dominate the AI race. The best power source for running these operations around the clock isn't solar or wind, it's nuclear. If last year was about developing AI, this year is about powering AI. That shift is going to create enormous winners. Theme number 5, American industrial policy. Fifth, and this is crucial, we're witnessing the rise of American industrial policy on steroids. The government is no longer just regulating markets. It's actively picking winners by directing capital, enforcing tariffs, and declaring certain industries strategically critical: rare earths, semiconductors, nuclear energy, defense systems. The free market purists might not like it, but it's happening. And it's going to create massive tailwinds for companies that align with government priorities. Those 5 themes are your roadmap for 2026. Now let's talk about the stocks positioned to capitalize on them. Stock number 4, Chevron, CVX. Starting with number 4, Chevron. Ticker symbol CVX. Bloomberg just reported that Chevron has lined up 11 oil tankers as Venezuela's so-called dark fleet disappears. This is happening right now. The United States is forcing open Venezuela's oil sector, and it's going to be rebuilt with private American capital, not public money. Chevron is the only major U.S. oil company that's been operating in Venezuela for decades. They never left. They've got the relationships, the infrastructure knowledge, and the first-mover advantage on what could be the largest oil reconstruction project in modern history. Before recent events, Chevron was already producing roughly 17% of Venezuela's total output. Now imagine what happens when sanctions get fully lifted and production ramps back up. Chevron's fourth quarter earnings are coming January 30th. Wall Street is going to be laser-focused on what management says about Venezuela, the Hess acquisition integration, and capital allocation. Some analysts had price targets in the mid-170s even before this Venezuela situation exploded. Those targets are about to get revised upward. Beyond Venezuela, Chevron has Guyana firing on all cylinders with offshore production ramping alongside Exxon. Management is targeting over 10% annual free cash flow growth through 2030. Even if Venezuela takes longer to rebuild than optimists expect, Chevron has multiple growth engines running. Now risks exist. Venezuela's infrastructure is decimated after years of neglect. Rebuilding takes time. Oil prices are volatile. Political instability could flare up again. But if you believe American energy companies are going to redevelop Venezuela's resources, and given what just happened, that seems like a safe bet, then Chevron is the most direct way to play it, period. Drop a comment below if you're watching Chevron closely. I want to know what you think about this Venezuela situation. Stock number 3, SLV, iShares Silver Trust. Number 3, SLV, iShares Silver Trust. This is an ETF that tracks the spot price of silver, and it is one of the cleanest ways to get exposure to this market with high liquidity in both the stock and options. Silver is scarce, industrially critical, and melting up against the dollar right now. It's used in solar panels, electric vehicles, military hardware, and AI data center infrastructure. Silver is literally the most efficient conductor of electricity on the planet. When you need to move electrons, nothing beats it. Here's the problem: we're not mining enough. The silver market has been running a structural deficit of 160 to 200 million ounces every single year. We're consuming more than we're producing. London and Shanghai inventories are at multi-year lows. ETF inflows hit 130 million ounces in 2025 alone, and total holdings are now at 844 million ounces, up 18%. China is threatening export restrictions, which would put the U.S. in an even tighter supply squeeze. Now layer the dollar destruction theme on top of this. $38 trillion in debt. Federal Reserve cutting rates. Powell's getting replaced in May. All of this is rocket fuel for hard assets like silver. Gold has already ripped higher. Silver is playing catch-up. The gold-to-silver ratio has compressed from 100 to 1 down to 64 to 1. Bull case targets for silver range from $100 to $175 per ounce. We're currently bouncing around $60 to $70. That's 50% to 160% upside if those targets hit. I personally think silver can go even higher because it's been systematically suppressed for decades. Silver was added to the U.S. critical minerals list in 2025. The government now considers it strategically important. If you believe the dollar is being systematically devalued, which I do, and if you believe industrial demand for silver is structural and growing, which I do, then SLV lets you play both themes at once. Risk. When the Fed eventually reverses course and hikes rates again, hard assets could cool off temporarily. But long-term, the trend is clear. Governments keep printing. Trillions keep flooding the system. Hard assets keep going up. Look at the last 100 years of history. If you don't believe me, ask yourself if politicians have suddenly become disciplined with money. Of course not. If anything, it's worse. If this content is helping you think differently about your portfolio, smash that like button and share this video with someone who needs to hear it. Stock number 2, Kratos Defense, KTOS. Number 2, Kratos Defense. This is not your grandfather's defense contractor. They're not building aircraft carriers or $100 million fighter jets. They're building the weapons of tomorrow. And the U.S. military just made it official. The future of warfare is autonomous, cheap, mass-produced, and expendable. Why would you risk a $150 million F-35 with a pilot inside when you could send 15 drones at $10 million each with nobody in them? Lose one? Who cares? You've got 14 more ready to go. This is called attritable warfare, and Kratos is leading the charge. Their flagship product is the XQ-58 Valkyrie, a high-subsonic jet drone that flies alongside manned fighters as a loyal wingman. It can carry weapons, jam enemy radar, and absorb missiles meant for the pilot. Think of it as an expendable robotic bodyguard that also shoots back. Here's the massive news. The U.S. Marine Corps has just designated the Valkyrie as an official program of record. For those who don't speak Pentagon, that's huge. It means recurring federal budget funding year after year. It's not a one-off contract or pilot program. It's a line item in the defense budget that's extremely difficult to cut once established. Kratos expects to deliver 15 to 20 Valkyries in 2026. They've already locked in a $34.8 million contract from the Marines. There's also a classified program called Poseidon worth up to $750 million, ramping up in 2027 and 2028. Kratos's defense rocket systems business is exploding. We're talking 116% organic revenue growth in Q2 alone. They've secured 60 Zeus hypersonic motors from L3 Harris, and they're scaling production for the Navy. The Pentagon just signed a $900 billion National Defense Authorization Act. They launched the Replicator Initiative aiming to deploy over 1,000 autonomous systems to counter China. Kratos is first to market with these drones. They also just partnered with Airbus to develop a Valkyrie variant for Germany's Air Force by 2029. Europe is ramping defense spending post-Ukraine, opening entirely new markets. The stock ran hard in 2025, up about 190%. Market cap is around $13 billion now, but management is guiding for 15 to 20% organic growth in 2026 and 18 to 23% in 2027. The multiples could expand dramatically as revenue rolls in and more contracts get signed. Risks. Defense contracts face delays. Budgets get reshuffled. Timing is unpredictable. But given the current geopolitical environment, it's hard to argue Kratos won't be a major beneficiary. Stock number 1, NuScale Power, SMR number 1, SMR, NuScale Power. This is the most speculative and highest risk name on this list, but also potentially the highest reward. AI data centers are power-hungry beasts operating 24/7, 365. Solar can't do that. Wind can't do that. Nuclear can. NuScale is the only company in the United States with an NRC-approved small modular reactor design. That approval process took over a decade. That's a competitive moat you can't replicate overnight. They've landed major deals including Romania and the Tennessee Valley Authority through Energy to deploy up to 6 gigawatts of SMR capacity. This could be the largest small modular reactor deployment in U.S. history. Nuclear projects can face cost overruns and delays, no question. But with AI power demand exploding and the government backing nuclear as a strategic priority, NuScale remains a high-risk, high-reward play for 2026. Conclusion: these 4 stocks, Chevron, SLV, Kratos Defense, and NuScale Power, are positioned at the intersection of the biggest economic and geopolitical forces shaping this year. They're not guarantees. Nothing in the market ever is, but they represent calculated opportunities based on real fundamentals, government support, and unstoppable trends. Do your own research, understand the risks, but don't ignore what's happening right in front of you. The market is about to reward those who see what's coming and punish those who don't. Make sure you're on the right side of that equation. Thanks for watching Stock Vibe, and I'll see you in the next one.